What's up, everybody? Welcome back to Creator Crypto. I'm your host, Matt, and thanks for joining. Today, I wanted to talk about how, and I hear this all the time, people look at Bitcoin or cryptocurrencies and they think they missed the boat, that it's too late, that there's some kind of maturity level that's been hit, and it is what it is, right? Nothing could be further from the truth. As the industry matures, it's going to become clear which of these networks and protocols are delivering real benefits, real value, and which are not. For those that aren't, they're gonna crash and burn. There's nothing there. There's no value, right? And unfortunately, that's a large percentage of the currencies that are out there. They're gonna go to zero. But for the ones that are left, that are driving innovation, that are solving real problems and delivering real benefits, they're gonna benefit immensely, right? These are the big players that are going to help shape the future. They're the next Amazons, Facebooks, and Googles of tomorrow that'll really shape things. We're going to talk about a couple things that help show the staying power of cryptocurrencies and how things are really just getting started. This is not financial advice, and I'm not encouraging you to go out and FOMO into the latest meme coin, right? Because you might get rich quick. No, I'm encouraging you to learn everything you can because this space is moving fast. It's catching on, it's growing by leaps and bounds, and it's only getting started. Before we get into it, remember, if you like the video, please hit like, hit subscribe, and give me a comment. Let me know what you think in the comment section. So to get started, I just wanted to put a chart up showing where on the adoption curve we are for cryptocurrencies relative to the adoption of the internet. And just something as profound as the internet, if you think about how it developed over time. If you put that up against cryptocurrencies, see where we are. So on the cryptocurrencies line here, we're in 2021, right? If you compare that in the adoption curve to where the internet was, we're currently where the internet was in 1997. I mean, think about that. How much growth happened for the internet since 1997? You remember, for those of you who are old enough, what that looked like in 1997 and where we've come? If there's that kind of growth left for crypto industry, man, there's a lot coming. Okay, so one of the things I wanted to go over today was an article that I saw in Reuters. And in that article, it talks about an interview that Jelena McWilliams, I hope I'm pronouncing that correctly, who is the chair of the FDIC, told Reuters in an interview on Monday that a team of U.S. bank regulators is trying to provide a roadmap for banks to engage with crypto assets. That's a huge amount of money that could enter the space once the FDIC is willing to insure those assets. I mean, that gives people comfort and it kind of stamps it with legitimacy that it didn't have before. So it's an amazing indication. She goes on, that could include clearer rules over holding cryptocurrency in custody to facilitate client trading, using them as collateral for loans, or even holding them on their balance sheet like more traditional assets. So they could buy Bitcoin and hold it on their balance sheet, right? Like they would hold cash. I think that we need to allow banks in this space while appropriately managing and mitigating risk, she goes on. And this was really the eye-opener that I wanted to highlight here. If we don't bring this activity inside the banks, it is going to develop outside of the banks. The federal regulators won't be able to regulate it. The amazing thing about that is these are the people that usually need to provide their stamp of approval on things for it to move forward at all. Here, that's almost been flipped on its head. These regulators are saying, we need to get in now or the train's going to leave the station and we're not going to be able to shape it in a way that we want. It almost makes it seem inevitable, which is amazing to me, right? So if you think that this thing is done growing, this crypto thing is done growing, it's not. It's just leaving the station, and these regulators are starting to realize that if they don't get in now, that they're going to fall behind. And by them getting in, it offers legitimacy to a lot of people who are uncertain. Once they get on board and they provide that regulation, and we've been talking about that, it starts to feel like a lot of momentum is picking up and a lot of steam for things to progress quickly. So again, just speaks to kind of the inevitability and the growth potential here. It's not done. Okay, so the last thing I wanted to go over today was this survey from Bitwise that I came across. The Bitwise ETF Trends 2021 benchmark survey of financial advisor attitudes toward crypto assets. And the goal of this survey was to benchmark how financial advisors, who manage roughly half of all wealth in America, are thinking about crypto after the developments of 2020, including whether and how they are allocating to crypto in client portfolios. So this group of people manage a huge amount of wealth that still hasn't been allocated to crypto, and they're thinking about it. So this survey gives some insight into what their thoughts are. And if you skip down to page 7, are financial advisors allocating to crypto in client accounts? The percentage of financial advisors who report allocating to crypto in client accounts rose more than 50% last year. That's pretty good, right? If you keep reading, though, it increased from 6.3% to 9.4%. Still, with less than 10% of advisors reporting allocations, this remains the domain of early adopters. So while they're seeing a dramatic increase, 50% is pretty good, it's still a small percentage of the clients that have some level of exposure to crypto. And the arrows all point in the same direction, that this is going to go up. So there's plenty of headroom. It's an amazing stat. Furthermore, 78% of surveyed advisors who have allocations to crypto in client portfolios intend to increase their clients' allocation to crypto in the next 12 months. 22% intend to hold steady. No advisor with client positions today reported plans to decrease or eliminate their position. None. Nobody is eliminating positions. They're only opening or increasing, or at least maintaining. That 78% is up from 42% of advisors the year before in 2020. 17% of advisors who are not currently allocating to crypto in client portfolios said they will either definitely or probably allocate in the next 12 months. That is more than double the number who reported plans to allocate in the 2020 survey, when just 7% of advisors said they either definitely or probably plan to start an allocation. If you keep reading, beyond those advisors with explicit plans to allocate in client accounts, an additional 40% said they were unsure about whether they would allocate. Just 15% of advisors said they would definitely not allocate, and 28% said they would probably not allocate. That means that more than half, 57% of advisors are open to allocating to crypto in client portfolios in the next year, up from 45% in last year's survey. So over time, as people learn more, as some of these technologies become more and more established, their advisors, who control a substantial portion of wealth in the United States, are becoming increasingly open to allocating their clients' wealth to it. Imagine if that money comes into the space, what a huge boon that would be. And I just finally wanted to highlight some of the reasons that were provided that are preventing advisors from either increasing your investment in crypto assets or making your first allocations. All the ones I've highlighted here, I chalk up to it's new, it's still early, right? Regulatory concerns. Regulators don't know what they're looking at. They don't know how to regulate it. That's an indication certainly that it's still early. No idea how to value cryptocurrencies. Still young, still early. Lack of easily accessible investment vehicles. Well, that's happening, but it's definitely early. They're still getting approval from Gary Gensler and the SEC, which we've talked about. Custody concerns. Lack of understanding. Don't feel confident talking to clients about crypto. Reputational risk. Cryptocurrencies are a scam. All these things indicate to me that it's still early. If you think it's a scam, you don't know what you're looking at. You don't know how to evaluate which ones are offering true benefit and which ones are not. That's an indication to me that it's early. So just some amazing input to show that the technology and the crypto space at large are picking up a tremendous amount of momentum. There's nothing to indicate it's going to slow down, and all this means that more money is coming into the space. So I encourage you to continue to learn, understand the technology, read what you can, see what's happening out there, see why there's so much excitement, and where there could be a tremendous amount of value for you and in your portfolio. That's it, everybody. That's all I got for today. Thanks for joining. Remember, if you like the video, hit the like button, hit subscribe, Let me know what you think in the comments section. I'd love to read the comments and get your input. Until next time.